Hey everyone, Ian King here, editor at Smart Profits Daily with your weekly market insights video. Before we get into it this week, I just want to please ask you to subscribe to our channel. And if you like our content, always feel free to smash that like button. Joining me this week, I've got my friend and colleague, Brian Christopher. And Brian, our viewers want to know, were you one of those neighbors that was shooting off fireworks all weekend, or were you one of those neighbors that was complaining about it? Which neighbor are you, Brian?
Hey, Ian, thanks for having me. I am not a firework person. When I was younger, I got into a little bit of trouble with those things, and I learned my lesson, and I stay away, and I encourage my children not to participate either.
That's good to hear. I think we're in the same boat. I think that, everyone spent their $1,200 stimulus checks on fireworks this year, and down in South Florida, even though we didn't have the townships putting on fireworks, we sure had a lot of neighbors that did. But let's talk about money, because I'm looking at a chart right now of M2 growth, and it's pretty incredible that we've seen an absolute explosion in the amount of money. Now, M2, for all of you viewers that don't understand, is basically, it's all the paper currency in circulation, plus all the money that's in checking and savings accounts, and also in money market and short-term instruments. And M2 growth has grown from about 14 trillion or so to over $18 trillion. And this has been the fastest it's grown in 30 years, in at least 30 years. Brian, what do you make of this with all this money coming into the system right now?
It's that word again, Ian, that it seems like we were hearing an awful lot when this stimulus started flowing, that word unprecedented. This growth has been literally insane. And this money's looking for places to go. And obviously, some of it's gone into stocks, but we're also seeing gold and precious metals as beneficiaries of these inflows.
And that's a great point. This money has to find somewhere to go. And I want to share this other chart with our viewers. Gold is heading towards a new high, and it hasn't been here since 2011. Can you break this down for us? What's going on with gold investors? What are they thinking about right now when they're rushing in to buy that precious yellow metal?
Well, and if you think about alternatives, right? Like if you used to keep your money in the bank, years and years ago when you can earn a 5% interest rate, today, if you're lucky, maybe you're at 1.2. And when you factor in inflation, your after-tax interest rate is actually negative. So there really isn't any risk, even though, as strange as that sounds, to putting your money into a non-dividend paying asset like gold, or I would suspect that cryptos are a beneficiary of this as well.
Yeah, I think we've seen some money flowing to Bitcoin. There are other narratives driving it as well. But now, as an investor, would you be buying gold, or would you look at some miners in particular? What's your preference in that sector?
Well, it depends on your risk tolerance, as investing always does. Gold has been on a pretty steady uptrend, as you can see in the chart, and it can continue to go up further. We'll see headlines every day. The most recent ones that I've seen have been $1,900 or $2,000 gold. So if it's close to $1,800 right now and it goes up to $2,000, you're looking at an 11% return. However, if you put that money into a well-run, well-capitalized gold miner, then you can see double and triple the returns. You have to choose the right ones.
So definitely the miners are a lot more risky. So people who are looking to take a little more speculation on gold, they would buy a mining stock rather than the GLD, which is the ETF that tracks gold. That's a great point. I want to bring something else up that has really perplexed me, and it's also made me think that this market could go higher than a lot of people anticipate. And it's pretty incredible data point that about 25% of investors over the age of 60 sold all of their stocks in the correction we had earlier this year. And what do you make of this, Brian? I mean, was this the right thing to do? Are these investors going to come back? Are they going to chase the market higher now? What's happening here?
Well, historically and unfortunately, we have seen that happen when people get out too early and they get scared out. And man, it was scary. From February 19th to March 23rd, 31% drop in the S&P 500. Lickety split. I mean, that's scary. And so, but oftentimes they do come back. That FOMO narrative, the fear of missing out. It's a very real thing. And what do you do when the market just keeps going up and your money's sitting there potentially earning negative rates with inflation? I think it will come back. Yes.
Yeah, it's pretty incredible. There are like two principles that I think I found in investing for the last quarter century. And number one is that nothing changes sentiment more than price, right? They kick you when you're down. They love you when you're up. Prices are down. Everybody wants to sell. The sellers come out of the woodwork. When they're up, everyone comes out and buys. It just absolutely makes no sense. And the best investors are the ones that can understand when those are happening and fade them. So to be a contrarian, I think you'll outperform all these people that are selling things at the lows, chasing things at the highs. The other, and this comes because I was reading a bunch of bullish and bearish cases over the weekend from Wall Street strategists, and a lot of them are bearish on the market. I mean, most of them, their bull case is maybe a little bit higher from here, and the base case seems to be around 2,800 to 3,000 on the S&P, which is a little lower than we are now. But the principle that I've always thought about is that a lot of these Wall Street strategists are very smart, and they analyze the data, and they come up with this supposition of where they think the market's going to go. But they forget that most investors are not that smart. They just see something going up and they buy. They see something going down and they sell. And that's the reality, is that most people don't consider all these different factors, like maybe inflation's increasing or what the Fed could be doing or what government policy is. It's more of just kind of going from one hot idea to the next. And I think we've seen a lot of that kind of speculative fervor lately. So I just find that really interesting that 25% of people sold their stocks at the lows, and now we have all the speculation that's happening. But let's move on to another big deal that was announced yesterday, because we haven't seen Warren Buffett active at all in the last year or so. He's kind of been sitting on the sidelines. He's sitting on a huge amount of cash. But he did do a little deal in the natural gas area with Dominion. Can you explain exactly what Buffett did with this natural gas company, Brian?
Yes. So Warren Buffett isn't one of those people that we think of as suffering from FOMO. But he, at his May stockholders meeting, he said that he had $137 billion of cash that he was ready to put to work. He's also been clear that he wants to put it to work on big deals. He's not looking for a $1 billion deal or a $100 million deal. So in this case, he bought the natural gas assets of Dominion Energy. And this is actually a strategic one for Berkshire Hathaway, and specifically their Berkshire Hathaway Energy subsidiary. Before this, his energy subsidiary controlled 8% of the natural gas transmission in the United States. With it, it will control 18%. So it's likely with a $4 billion purchase price and adding some debt on that he can easily service, it's likely that it'll make him some good money over the years.
Yeah, that's interesting. And it seems like there's not much growth, though, in natural gas. I want to just show our viewers a chart of electricity generation from selected fuels. Natural gas is going to be, it's 37% now. It's predicted to be about 36% by 2050. But, the contrarian in me is thinking, why did Dominion sell out?
Yeah.
Right? I mean, maybe Buffett is usually right on these types of deals, but maybe Dominion doesn't really see a big future in it. And right here at this chart, you see that renewables are going from 19% to 38%. So renewables are going to take a big market share. And within renewables, one other thing, because in Automatic Fortunes, we are heavily into different types of solar energy plays, 15% to 46% is where renewables are going from 2020 to 2050. And, Buffett is usually right on this type of stuff. It's hard to bet against them, but really, if you want to start investing in new economy and new energy stocks, you have to stay away from natural gas and go more towards the renewable sector, specifically solar, even more so than wind and geothermal. But one last thing, Brian, I want to bring up, because I know you are launching a new service this week called Flow Matrix Trader. And a lot of people have been really buzzing about this. And you've got more details to share coming this week on Thursday. Anything you want to just touch on with our readers about what they could expect to hear from you this week?
Well, basically, Flow Matrix Alert is an option service. It's very simple. We don't try to make this super fancy. Really, we want to follow the trend. The trend is our friend, and our system can help us with that. It can also alert us to really beaten down situations. And you're right. I will have more in my Smart Profits Daily article on Thursday, and it's a really interesting product that we've actually been testing with live subscribers for more than a year now, and it's working pretty well. So we're excited.
Great. I'm sure everyone's really excited to hear more about it this week. But that's it for this week's Market Insights video. I want to thank everyone for tuning in. For myself and my colleague, Brian Christopher, have a great week, everyone, and we'll speak to you soon. Thank you.